Hi, Tim. Thanks for being here with me and giving us an update on Fury. And you guys just gave your update on your drill program, and I'd love to hear about your drill plans for 2023, and maybe talk a little bit about the state of the market and your treasury, of course. I'd love to hear about all of those
Sure,
things.
sure. Hey, Chris. Hey, thanks for having me again. Anyway, yeah, so we just announced the 2023 program for this coming year. It's pretty similar to last year. It's going to be 15 to 20,000 meters. We're focusing on Quebec again, which is where we had our best hits last year at the hinge on the western side of the hinge of Eau Claire. And then we want to get back out to Percival, where we had that big hit in December. The other thing that's a little different this year is we did a lot of work out on the rest of the property, and we've come up with a number of new anomalies, 14 to be exact, and there's another 6 out in Laclarkey. Effectively, what we're trying to do is go after the best assets we have, and then and bring those forward with Eau Claire, and then bring out the discovery that we have with Percival, and at the same time still offer upside for a potential new discovery. And we've got obviously opportunity up in Committee Bay, up in Nunavut, but it's expensive to go back there. And I still feel strongly that we've got so much potential land where we are in Quebec, and it's backed up against, hydropower, road system, infrastructure, and these kind of things make a big difference when a senior or mid cap come along and want to buy you. So our goal is to get to 2 million ounces, which we've talked about before at Eau Claire. And it's not a magic number, but it's a good goal for us that really establishes that resource. And then when I sort of sit down with our counterparties, like at these bigger companies that are looking at us, they look out at the big property that we have, and it's like anybody buying real estate or any kind of investment. You have your core asset, and then you have this opportunity for upside. And I think we have done the work to bring these pipelines forward. So we want to make sure that we funded them well enough, and I think we're off to a good start.
So yeah, I completely understand. I mean, the Committee Bay, I mean, that's definitely a full-on bull market project when you can fund at, much higher prices, because it is expensive. So, I appreciate and understand that, guys pressing the brakes on that while we've gone through this 2-year kind of slog that luckily it seems that we're getting over now. But it certainly hasn't shown up in a big way in the prices of the equities yet. So sticking with, Eau Claire and that trend makes complete sense to me. And what about the JV that's down there?
So we have the joint venture. It's Newmont is we're all ready to go, and we've got our targets. They look great. We've done some more soil samples up there, and it looks really promising. Not only in the middle of the property, but further closer to them. There's some interesting stuff that's going along that looks very similar to what they have at Eleanor. We're waiting for those results to come back out. But as far as the drills program, Newmont's been in this discussion about like their acquisition potential. We're just waiting for them to come back, and these big bulge bracket companies take time. So that's a possibility. We just don't have it in writing yet from them, and we're waiting for that. I think what could be interesting out of the joint venture is that Eleanor they've extended that mine another couple years because of the price of gold. And they have told us they definitely value the Eleanor. They're not going anywhere, and they're going to have to feed it. And they're going to have to have new discoveries up there. You've got Sirius up there on the border. It's potential open pit, and what lies in the middle of the property. I mean, there's an argument that there should be some kind of consolidation there over time. And I look, Chris, a lot of the investors that I know you talk to aren't as focused on geology. They're focused on, picking stocks and making good ideas. Now, we've talked about Fury for a year and a half since I've been here. Stock price hasn't moved all that much, and it's frustrating. And it's frustrating to be a gold buyer and waiting for these consolidation stories to happen, waiting for the gold price to hit. What I can tell you is when it does, it's fast and furious. And the goal here is that you want to buy a company that you know your money is at least not going out of business, right? And what I would tell you is the restructuring that we've done with Fury financially has completely flipped the tables from where I started. When I came here, we didn't have any money. We didn't have a year's worth of geological study. We didn't have the joint venture that was cleaned up. We didn't have the Dolly Varden trade put on either. And all of this has happened, and the share price is actually less, and gold price is actually higher. So there's going to be a comeuppance on valuation, and I think what's the holdback is when gold price goes up, everybody wants to buy the gold, like the physical gold. That's your first move. The second move is into the seniors where there's liquidity, and that's typically a lot of the institutional guys and putting the money in there. And then it will start going downstream to the mid caps and the small caps. When it gets exciting is when you have M&A. And what this is lining up for is if we're up here at above 2,000 an ounce, we haven't even had a pause yet in the Fed. We haven't had any pressure from the Chinese right yet on the dollar. But that's all coming. And I think that if you have some allocation in the gold market, generally speaking, you want to do it in a bucket, and you can buy some physical gold, you can buy some Bitcoin even as a sort of a hedge. But at the end of the day, when you want real torque, and it's a company like Fury, we are arguably the best financed junior gold company in the sector, hands down. We've got 17 million bucks in the bank. We've got $60+ million in Dolly Varden, a great equity to have. You could argue that gets bid out at a much higher valuation. I mean, typically the takeout's 30% or more. I mean, so we could pull out 90 million bucks out of that as a draw, and we're funded for 2 years right now. And so I like my chances. I've asked everybody who came in on the raise that we just did to come in for 18 months and give us that opportunity to sort of earn the economic trade on that. And so right now, I think we're sitting in a really good spot. It's going to be interesting. You just have to be patient, right?
Right. So, so that's something, if you wouldn't mind just touching on in your experience, which has been, many decades in, focused on precious metals. And so you've seen these cycles before. And, one of the things that I have to remind people of, frequently that is just really poorly understood is that, for the last couple of years, you guys have had good results, but in a declining market, that has not translated into an elevating share price.
Yeah.
So, maybe touch on that just a little bit, and then, take the opportunity to get us excited, because the reciprocal thing happens as well. When the price of gold is going up, then, share prices can go up, and people say, well, what fundamentally changed with Fury? So, well, nothing fundamentally changed today with Fury, just like it fundamentally got better and the price got worse in the declining market. Well, now it's rising, and it's, today fundamentally the same as it was yesterday.
Yeah, no, listen, I go back to this whole gold analogy. When the gold price went up, everybody was like, well, how come your stock price didn't go up? And I'm like, well, first off, when you get a banking crisis, everybody wants physical gold, and that's where the money flows. The money will flow downstream after a while, but it takes a while to work itself out. It's like the real estate market. What I like about the real estate market is it's completely inefficient, and you can find value opportunity. When you go into the junior space, basically right now, everybody's been sucking wind for a number of years because the flow just hasn't gone into commodities, or particularly gold. The more the demand has been in lithium and copper per se because of electrical vehicles. Gold has really been a trade on a currency. It's relative to the interest rates of the US. It really is in the dollar, where the dollar strength is. And people view gold as more of a hedge rather than a commodity that you use up in a car. effectively, if you see risk in the equity market, you don't go buy, you might buy gold bullion, but you won't go buy gold equities because they're in the equity market and they can be more illiquid, where gold is pretty liquid itself. The difference is that if you are a big bull on gold, you actually don't want to buy gold because there's not the upside. So you go from $2,000 to 2,400. You made $400 on 2,000. If you bought $2,000 of a junior explorer and the gold price goes up like that, you can double or triple your money, and you got the options of a discovery, or you got the optionality of a good management team that's able to extract value and do deals or raise money. I see companies like us, we get shorted. People come in and try and trade the short because they think there's a trade on the market on the stock, when fundamentally we've never been stronger. It's funny the way it all works, but when you catch the flows of the junior market, when their valuations are low, like our whole sector is, and you see the money, it's a finite amount of space to own these things. The gold market is really pretty small from a global perspective. And when the money comes in, it comes in huge. And that is what this is. It's an option play on big upside on a currency trade plus discovery trades. So I look at like Fury, for example. We can win in Nunavut, we can win in the joint venture, we can win on discoveries in Quebec at Eau Claire and Percival, and we can win in Dolly Varden. We're not only can get bid away, but we can get leverage to the gold price, the silver price, and we can actually have our whole company just bid out for just one big acquisition of Eau Claire. And there's value to be created there. And you get this huge torqueness. And that's why you buy these things. You buy these things because you want an opportunity for real upside. And when you go into a junior market, there's a lot of guys who are teetering on staying financed, and they may not have the resource or the opportunity. So to describe a typical junior, you don't have 4 or 5 different assets. Typically, you have one. You don't have a Dolly Varden with 80 million in equity in another company. You probably are sitting on 5 or 6 million in cash and have to go raise it for every time you want to put a drill hole in. We're pretty unique, and you don't have a giant US institutional account owning 7.5% of your company. You don't have a major owning a percentage of your company. And these are the kinds of things that I think stand out about Fury, that in times like these, when you want to take a shot, these guys are really, the company like us takes a lot of the risk away from your investment, and you're not sitting there worried about us going out of business. So maybe too much for your question, but I think your investors tend to like this.
No, I think that's great. I don't mind too much, and I don't think it was. I was just looking at a chart just this morning, and I was talking about the top undeveloped silver projects globally. Dolly Varden was 8th on the list as far as grade. Now, it was lower on the list as far as the size, the silver equivalent ounces in the deposit, but it was the 8th highest with regard to grade globally on this particular chart. Now, they're discovering like crazy. So I would argue that, they haven't done a resource update, and they've been, doing just absolutely fantastic. And so, there's the potential for them moving up that list. And just the fact that they're on it is very promising, and so certainly is not in the Fury stock price.
Nope.
Just as a shareholder, a significant shareholder of Dolly Varden, even if Fury was just an investment company, from the market cap of Fury compared to the potential of Dolly Varden, shareholders could have a win if Fury was purely a holding company. I mean, it's
Oh yeah, no. Look, you do the math. It's crazy. So we've got 17 million in cash. We got, I don't know, we've got, say it's 60 million there. That's 77, and we're only trading at about 108. So you got $30 million sort of valuation for Fury for all of Nunavut, which we put 60 million into, and all of the joint venture, and all of our assets in Quebec. I mean, it's a pretty small number comparatively. And then what else is interesting is, we own 23.5% of Dolly. We're by far the largest shareholder. And if someone's interested in taking over Dolly, I'm surprised we haven't gotten a bid just to get our shares, because they would get all our shares plus our cash plus the assets. And these assets are big packages, and it's one way to come in there and take a leadership role. I mean, Hecla owns 10% of Dolly, and they surround the property with their property. But silver is really hard to find. There's just no new finds, and so they're eighth on the list because silver is getting scarce to get good finds of silver. And yeah, and it's the Golden Triangle is a pretty popular spot too. So it's likely going to happen that they'll get bid away at some point. We don't want to sell any shares because we think there's more upside. So I sit on the board. Michael Hendrickson, who's our senior geologist, is on the board and sits on the technical committee. And we're not selling shares because we think that there's a lot more upside, not only in their discovery, but in the potential share price they get taken out. How it gets translated into Fury, I don't know why more people don't buy Fury for the exposure there, because they get a bunch of upside with us. It is a little bit of apples and oranges because silver stocks do trade differently. Nothing goes up faster, but nothing goes down quicker either. I just think we're heading into a bull market, and that could be literally the golden goose egg for us in order to really translate our company, to transform the company into something special, because we'll have the leverage of potentially $100 million right there to do, whether it's to acquire an asset that's really beneficial to us or bring our current assets forward. Who knows? But yeah, there's value there, and I think investors, I would argue, would be better off. It's a better value purchase to buy our stock than it is Dolly Varden, because I think you could argue they're trading at a premium, and we're not.
Right. Well, tell me a little bit more about, first of all, if you don't mind, that
Sure.
looked like an exciting target, and you guys had some success there. And what do you see, and what's the potential for that particular target?
Well, we got in there, and just as a reminder, it's 14 kilometers to the east of Eau Claire. There's a winter access road so that you can put a road in there. They've done the chemical studies on it, so it doesn't need to be a standalone resource. You can pull it into the Eau Claire and put it through a similar type of mill. So what we're going to do is we're going to do a resource update next fall, and some of the drilling that we did last year will help bring those ounces that are there into the resource and add to them. What was special about last year is we got obviously some good hits, but we hit on 5 out of 5 holes. So 100% hit ratio is good. It's interesting listening to the geologists talk about it, because they kind of complain. When you hit 5 out of 5, you still haven't defined the resource. So you only find out the edge and how it's positioned when you miss. And so there's still a little bit in the dark about how big this thing is or how it's really moving. But we're going to go back there, and obviously that was a great result. So we're going to try and bring that forward. I mean, this could be a big resource for us, a much bigger find. And I think that would bring a lot of attention to what we're doing in the territory. But again, I think also is exciting is that when we go out to these anomalies, and we got criticized last year for spending money on all these soil samples and geophysical studies and whatnot. But interestingly enough, that's where the blue sky is. And if we can find another Percival on one of these anomalies, I think it would really transform the stock price too. The thing that's interesting about it is all these anomalies sit within a mile of the Canard Deformation Zone, which is that zone that runs for 100 kilometers, and we own 30 of it. And all the geophysical, the geochemical, and the structural analysis of these anomalies looks just like Eau Claire and Percival. And so there's no reason why we couldn't find another big resource. And in all honesty, I think this is if we do, this is going to get a lot of attention from the majors. And I think this is where we, I go back to your question earlier about our stock price. It's interesting from an institutional standpoint. We have really done a lot to add value to this company. I've had no problem raising money, and a lot of it's institutional because they come in here with a longer viewpoint. But when you don't have these super exciting hits, like, Dolly has these big wide hits, the truth of it is we're hitting pretty much the same, if not better than they are, but ours is gold and theirs is silver, and they're getting a lot of attention. They do a great job, but if you have a spectacular hole, that's when retail come in and they start buying. And you saw that one hole that we had last December, the stock was up 100%. So my view is, for me to get the stock price up near term, we have to have drill holes and its success there. We will have drilling start imminently. We've already got people up at camp, and we're going to bring our drilling program forward a couple months this year. Last year, we had the assay problem. The assay labs were so slow. We were getting our results in the middle of tax loss season and in time of year where the holidays are around and people aren't paying attention. And in truth, I think there's no reason why we couldn't pull it all and get up there. And frankly, we got financed earlier. Last year, we didn't get our money till late April when we did the raise with the large producer and the large U.S. institutional account. This year, we had it done, in February. So we're on the move. Assay results look like they're not going to take as long as they did last year. We've got our better targets, and we're going to go right back into them, right? That's the best place to find them. And yeah, I think it's going to be an exciting year. And there you go.
Yeah, well, I'm not sure who was critical of you guys exploring, because you are an exploration company. And so that would be my expectation, that you get out there and define what else is on your land package and, surface.
Well, that's Chris, it's all like people want that one drill hole, like go get that one. Someone said this to me: don't let anyone else dictate how many ounces you have to produce or where you got to go. Follow the geology, and the geology will dictate where you go and how much you spend at a particular time, because it's Mother Nature, and that's where the best value is. And so that's the theme that we're sticking with. But the money that we spent, I think it was like 400 grand, and some people felt we should have put that in a drill hole, and maybe we should have. But all of a sudden now we've got potential for real interesting discoveries that majors are looking at, where and I think these are some of the defining choices that we have, Chris, is like a typical junior would have done that, but we're trying to build a company, and we've got the money that we don't have to worry about raising the next dollar. I don't worry about raising money. I have more accounts, institutional too, that want to buy into the stock on a deal. They want us to do an equity offering. They don't want to go out and buy in the open market because it pushes the stock price up pretty too fast on them, and they want to get a better deal. But in truth is, we're keeping our share count down as much as possible. I think we've done a good job of that. I think the recent raise was at $1.44 with the flow, so the dilution was minimal. We didn't dilute last fall when we raised the 7 million when we sold the Dolly position, and we sold it to one of the marquee institutional accounts in the U.S. that's going to be friendly to us and friendly to Dolly. And Dolly's price ripped 55% as soon as we did that. They took the overhang off. These are the smart value things that are happening that people aren't recognizing. And I think the retail sometimes can be a little bit too much trade oriented in the moment and not enough longer term, because the value of these juniors is really comes off if you can take a low value stock and get a bigger company interested into it and finance it, bring it forward, and then get it bought. And that's where you get those 5 or 6 baggers on your investments, and not the 20% trade or loss in the short term, right? And that's how I look at it.
Well, there was some advice. I can't remember which person it was that I heard this from, but one of the major successful guys like Ross Beatty and whatnot in this, and they said at the end of the 2 years, they're talking about their own book and reflecting, and said, if something is down 50, 60, 70%, then it's one of two things. It's either a buy or a sell. It's no longer a hold. And so this isn't advice to anybody, but personally, that's what I've done. I've got conviction in the Fury story, and so I've been averaging down periodically, and I feel good about that. I don't feel, I look at the number of shares that from my last position, and I feel fine with the price that I paid a year and 2 years ago, and I believe that it will exceed those prices. And so that makes me all the more excited about the lower price and the more shares that I was able to accumulate now. And so if you have a company that you believe has good fundamentals and great assets, and this unique opportunity with an investment in another junior, and there's not risk of it going out of business, so the fundamentals have gotten better and the price has gone down, then like you said about real estate, there's a disconnect there, and that's where the people who have longer term vision take advantage, as opposed to getting too worried.
Well, listen, Chris, just so you know, I've averaged down too, so I'm right there with you. And I bought more last week. I do feel like, listen, I think we're poised for something's got to happen economically. And look, if the gold doesn't run here and the money doesn't come into the junior space, we still have a good company that's well financed. And we might not have made our 5 bagger, but I don't think we're going to zero by any means. There's, every time we drill, we're finding more gold, and there will be value created. We're not a company. We've cut costs last year by 30%. I mean, the companies that you worry about are the ones where they're all spending a lot of money on offices and things like that and travel. We don't do any of that. We've been very careful on the marketing spend. We spend when we think it's effective. And we don't when it's not. And so the money that's in this company, the money that I've raised is money I've raised from my friends and my family. And so I have conviction. It's just a matter of whether everybody else wants to go jump in. We've got it. I know we've got a good company. We just got to wait for the market. 90% of the success is going to be the flows of money coming into the junior gold space. And I just still think it's going to happen some way or somehow. And as one, I'll leave you with this. I had one major institutional portfolio manager say to me, Tim, we sat down and I started describing all the details about all the mining we're doing. And he said, look, you need to pull out a map. And I said, what do you mean? He goes, look, you used to do this for me. I'm going to do this for you. Think about the big picture and the way the world's working right now. Canada is becoming more desirable than ever for mining because of the geopolitical reasons. You've got these big macro plays out there that eventually are going to take hold. And he's like, I believe that their gold is going to become more high priced. And he goes, and that's going to make consolidation come to Canada. And he said, you, from a geological standpoint, have three assets that are sit next to three majors. Your Dolly Varden's next to Hecla, your Nunavut is next to Agnico, and then you've got your Quebec next to Newmont. And he goes, in my opinion, you just can't screw up. You just keep doing what you're doing, and in 18 months, you're going to get bid out one way or another, because the majors need the bigger properties, and that's the way it should work. Economies of scale, costs are going up, and prices and commodities are going up. You're going to have major consolidation, and you're right next to everywhere you want to be. End of story. So that's another way to look at it. But yeah, I'm happy to talk anytime, Chris. Any questions? Or I know we've kind of run out here, maybe.
Oh, well, I just comment that clarify when you say you've raised from friends, you're talking about the largest investment institutions in the United States. So you have
Well,
you have solid friends, and so I just wanted to clarify that for everybody. It's not your neighbor buddy; it's major investment institutions that I suppose we shouldn't name, but
right. No, well, listen, when you work with people over that kind of time, that they're happy to have someone like myself, where they know there's loyalty, they know there's honesty. I can't replace those. A lot of these small companies that pick up a lot of retail, they can just go out and get new retail people. It's no big deal. There are only a handful of these big, giant institutional accounts. And if you ruin that relationship, it's gone forever. And so what they asked me to do is just to be thoughtful how we allocate the money. And they're willing to take the risk the rest of the way. They know that, geology is never an exact science, and they know the markets aren't either. But if you run a good company the way it's supposed to be, they have no problem. And that's why they're in, and they're big believers. And those institutional accounts have not only since taken a position in Fury, they've bought into dozens of other junior companies, because they believe in the trade that's coming at us with the gold market.
well, that's great, and I love to hear that optimism and third party validation from the most sophisticated investors and money managers who are they're professionals. So it's not just me with the limited amount of information that I have, but
Chris, you do a really good job. Listen, I did what you did full time for 20 years, and you do a really good job. And I think that you have the same style as I did with the people that you work with, and this is why they are with you, is that you're honest, and you back up your opinion, and you work hard. And I came out to Phoenix a number of times and met everybody, and that's all they want, right? And it's up to them to decide which stocks they want to pick. But your job is to present as much of an honest opinion as you possibly can, and you're doing that.
Well, I appreciate that. That is exactly how I view my commitment to everybody, is to provide my honest opinion based on the best information that I can get at the moment, and then provide a conduit to the companies if people have questions. So, like you said, beyond that, it's there's most certainly some uncertainty, and we are talking about mineral exploration, and so between markets and exploration, it most certainly is risky. And so luckily, I think the people who are investors are have proven themselves to be risk tolerant and understand that timing is important, and timelines. And so you do have to have a bit of patience with markets and with the drill bit. So
Yep, I agree. Great, Chris.
all right. Well, thank you, Tim. I really appreciate the update, and I look forward to seeing you in person at some point, and hopefully gold keeps
Yeah,
on.
well, no, well, listen, we'll get out there soon. We'd like to do it.
Okay, sounds good. Thank you, Tim.
Take care.